Happy Saturday, everybody. I hope you guys are having a great weekend. Guys, we have some major employment updates that I want to share with you both on the national stage and on Tennessee's front. I think you're going to want to see this. But not only that, but I went back to 2023 and pulled some of the biggest losses from sellers in homes. And there aren't just a few, there are a lot. And we're talking about in all price bands, $50,000 losses or more. We're going to dig into that. We're going to figure out if there are some lessons we can learn from some of those homes, and you are not going to believe some of the neighborhoods and some of the losses. It blew my mind. So without further ado, we've got a lot to cover. Let's take a look at the data. Now, first things first, this ISM Services Employment Update, this chart was so brutal. I don't know if you're looking at this line, but it clearly correlates with private services providing payrolls across the board. Up until COVID, there's a big disconnect. And then what in the world just happened? This survey just tanked. I mean, it just absolutely tanked. Now, it was so bad. It dropped so much that we had Anna Wong who posted, hey, the ISM employment plummet was so sharp that I emailed ISM to ensure that this wasn't an error. This is their reply. And basically what they say is, economic uncertainty is the main driver of the drop in employment, as it is the largest variable expense to manage for most service industry companies. We can assure you that there are no errors from what our panel reported for the month of December. Guys, that is wild. So this is something that we definitely need to watch, because it could be a leading indicator of employment falling through the floor. Now, I haven't personally seen it yet, but what I will tell you is Tennessee just broke trend. We are continuing claims up to 18,226. This is 20% year over year increase. We were at 15,382 last year, and now we're at 18,226. But we have to go back to February of 22 to see unemployment continuing claims to be this high. And guys, in February 22, we were still coming off of that COVID unemployment ramp down. So the fact that continuing claims are creeping up to February 22, it is indicating that we could be headed towards a recession. So remember, if continuing claims skyrocket, it's already in recession, okay? And so we are starting to see a trend up, a trend breaking up. Let's see if it continues. Let's see what it looks like. But guys, that is major red flags there. Now, let's keep going. Let's do the market update really quick here. November, $470,000 was the median price for a single family home. Inventory was at $68.29, and we had 1,800 closings. Well, let's see what's happened for December. So for December, we had 2,025 closings so far. This is, I think, what's going to be reported. Median sales price of $473. So just flat, guys. It's not a gain. I mean, 473 is pretty, it's like a slightly gain. It's like a 0.5% gain. Okay, when we look at under contract, we can see our under contract numbers are very tight around that 475, 473 number. This tells me, guys, January, which is typically going to be the lowest month of the year, is going to come in around 465 to 470. Again, it's flat, but it would be flat to down. So like 1, maybe 2% down, whereas this month it's up. This is the most stable I've seen our market in years, guys, in years. Now, I know it doesn't feel stable, but I'm just telling you for now, we have slightly, when we look at our active listings, let me go to our active listings here. Our active listings are slightly lower. That yellow number, 5,368, if we go back to January of last year, it was about 5,500. So you can see just slightly down from last year's number. We look at contract volume, slightly up from last year's number. We were at about 1,400 this time last year. And now we're sitting at 1,600 today. So that's up, guys. That's up. I mean, our 1,600 contracts up, active listings are down. We are a stable environment. Prices aren't moving. They're just staying right about between 465 and 475 where they've been the last few months. We are going to a spring, very stable, very interesting environment. Now, what will happen? I don't know what will happen, but what I can tell you is that the new listing explosion that I thought was going to happen this year, Redfin is now reporting that it will happen this next year. But when you look at new listings, it doesn't look like they have really materially increased anywhere. I mean, they're just now getting better than they were in 2022. But look at how bad it was for the majority of 2023 2023, it was so much lower than 2022. That little bit that we're above last year, it's not much. So let's see. We're going to go into the spring. Are we going to shoot up? If we get a listing explosion, guys, it could completely change the dynamics of the market. If unemployment is skyrocketing, it will put people to put their houses on the market. That could be the driver for a listing explosion. Very interesting, something to watch very closely. These are losses, guys. And let me show you what I mean. Look at this. Okay, this is a $4.7 million house. By the way, they're in all price ranges. All price ranges. $4.7 million house sold in May of this year. But look at what it was purchased for. Closed $4.9 million in 2021. Sold for $475. Now, that was a big one. But we're seeing it even on the small ones. Look at this, 525 High Street. This one was purchased for $250 in May of 22, which was the peak of the market. October 30th, it sold for $182, $70,000 less. Okay, it's in all price bands. Now, I want to zoom in on Franklin for just a second because there's two areas in Franklin that actually were very interesting to me. The first is West Haven, guys. West Haven had 3 houses that all lost. I'm talking about like $100,000. It's Wiregrass, sold for $1.2 million. But let's go back. Where was it in 2021, 2022? Closed for $1,325. This is $125,000 less than what it closed for in April of 22. Now, here's the thing I want you to pay attention to. Look at what it was listed for in March of 22, 1150. Someone decided to bid it up $200,000 or $175,000, and then they ended up having to sell it a year later. Like, what happened? What happened? I don't know the story. Look at this one. Horizon Drive sold for $1,175, but where was it? $1.3 million. $1.3 million. So again, $125,000 less. They knew they couldn't get it even out of the gate. When you go in and you look at the last list was 1.1. They upbid this one by $200,000. I hope you're seeing a pattern here because there's a real easy way to lose money. Let's take a look at this one. Last one sold for $1,025,000. They tried to sell it for 1.1 and eventually caved, $75,000. But where was it recorded before? $1.2 million. $175,000 less. Again, you look at the list price, they upbid this one by $50K. So this is a little bit different. But look, $517 a square foot, guys. I mean, that's crazy. That wasn't even a new build. So I say it's crazy. I don't know their story. And believe me, there are reasons to move. So I'm not trying to criticize these sellers. I want you to think about what you can do to protect yourself. Let's go down to Thompson Station, Spring Hill area. Look at these. These are different price bands, guys. Look at this one. 2030 Morton, $680. Okay, they tried, the last list, by the way, was $719, which means they got $40K off. But let's go to the previous price. Look at that. They started it out at $830. They were trying to get their money. Recorded in March of 22, $751. Guys, I begged everyone not to buy in the spring and summer of 2022. I begged you not to buy for one primary reason, okay? Prices were going down and inventory, active listings were going vertical. You literally had more options every single week. And I was like, look, you were getting way more options every single week. Just wait. And, you know, there's these people, these mathies out here that are like, well, but now with 6.5% mortgages, your monthly payment's still higher, even if you bought it at $680. And here's my rebuttal to that. Okay. This person bought it at $750 and they paid like what, $70,000 to live in 18 months. Okay. So they lost their monthly payment plus $70,000. I hear you on the math, but the math works out a lot better if you rented this house than if you would have bought it for this person. Let's keep going. Look at this one, 810 Alpaca. All right, it sold for 810, but where was it at in 2022? 925, 150. I mean, these are six-figure losses, guys. These are six-figure losses. Again, listed for 900, panic buying up 25, 925. Brutal, guys, brutal. Now, I know You're probably thinking, oh my gosh, Ethan, does that mean that house prices are tanking? The answer is no, they're not tanking. As you can see, the majority of these were purchased in 2022. They were, let's go to this map here. Like, let's go to West Haven. I know we've looked at this, but let me just show you what I'm talking about. It were these guys. It were these outliers, people buying in May, June of 2022. I mean, that one was probably in here, okay? But it wasn't even a new build. It was in here. And yeah, they sold it a year later and it dropped back. I mean, you can see the median dropped. It dropped back to the median. 10% off of a 1.2 million house is $125,000. So it dropped. The values have dropped. West Haven values dropped. They haven't fully recovered yet. The good part about that is if you were buying in West Haven now, you're buying it probably 10% less than where it was at peak, which feels a lot better. I mean, it's $150,000 less. You have to be careful. Don't overbid on houses. There's a reason the list price is where it's at. When people do these right, they list the houses based on comps because they know it's not going to appraise for more. And then some cash buyer comes in and overbids it. That equity's gone. Okay. Now let's go into, this was the other neighborhood. This was that one with the 800. Again, look, dropped. It's actually starting to recover in this neighborhood. It looks pretty stable at around 250 a foot. Let's see where it sold at when we were looking at that one. It sold at 250 a foot. Yeah, so I mean, it's sold for 250 a foot, which is where it's stabilized here. You can see it's stable about 250 a foot. But again, if you bought it up here, that the price dropped. It dropped. Look, nothing sold over 300 a foot in this neighborhood. Nothing sold over 300 a foot in this neighborhood this year. So you got to be careful. The other thing, oh, by the way, I do want to show you one more. I am kind of proud of this one. Oh yeah, there it is. Look at this one. Guys, this one right here. I sold this one. This was the largest loss in Williamson County. Now, again, I'm not hating on the seller. I'm telling you, this one sold $1.6 million November of 21. We bought it for $1,365. Got it for $235,000 less than what it was sold for in November 21. This was, my buyer wasn't trying to rip anybody off. He was trying to get what market would buy this house for. And that's what he did. And that's what we worked on. It's just the market changed, guys. And you can see look at all these people. These are $50,000, $100,000, $150,000 losses. All these people. Even this one right here, $325. It closed at $379 in May of 22. Now it's $325. Be careful. The best way to be careful, one, is not overbid on a house for what it's listed for. The second one, and I know you guys, I preach this every time, but rent. Look at what it rents for. Now you say, Ethan, I have no interest in renting. Okay, I get that, but listen, rent tells you what the market is willing to make a monthly payment on that house for. The market's monthly payment, if it's $3,000, then the value of a mortgage should be less than $3,000. Otherwise, you're overpaying for the house. Market rent tells you what monthly payments should be for that house. This is a lot. These are 42 that I've identified that are $50,000 or more. Now, I don't know the stories on all of these. They may have carved out land and just split it up, piecemealed it. Who knows? I don't know. But these addresses, they all look like losses to me. So anyways, hope you guys are well. Hope you enjoyed this. Please be careful out there. Nashville's a great place to buy. You still have to be careful. Be cautious going into the spring season. Pay attention to the data. Don't overbid for houses. Look at what rent comps are for. And if you need help with that, I'm happy to help you. Reach out. I'd love to help you. And with that, I hope you guys have a great weekend. I'll see you next Saturday.